Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the video, and a special thanks to those who have subscribed to the channel. I really do appreciate it. For those of you who may be stopping by for the first time, on this channel we focus on a passive income investing strategy. We cover my dividend growth portfolio, where I buy stocks in good companies that pay dividends. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. It really boils down to consistently investing, buying dividend growth stocks, DCAing on a consistent basis in growing companies with positive cash flow that covers the dividend, and companies that return a high yield on their invested capital. I utilize both a DCA approach, dollar cost average approach, consistently investing into the stocks within the portfolio on a bi-weekly basis, every 2 weeks at minimum, pretty much every week. I might miss a week here and there, but pretty much every week. And like I said, on a minimum, whenever I get paid every 2 weeks. I cover all my investments into the portfolio on this channel. I do not have a paid Patreon account, nor do I intend to ever have one. We all have enough to pay for, so it's free to see what I'm investing in every week. Just stop back in and check out the Sunday videos. That's whenever I post what I bought for the previous week. But if you would like to help out the channel, dropping a comment down below, liking the videos, and subscribing to the channel helps out tremendously. I also leave a Webull account link in the description. I don't really advertise it too often, but it's down there. If you don't have a brokerage account and you want to open one, you'll get some free stocks. I'll get some free stocks. It'll be based on whatever their most recent deal is. Sometimes it's one stock, sometimes it's 5 stocks, 10 stocks. Just depends on what kind of deal they are offering, promotion they are offering at the time. I don't cover what I do on my Webull account. The activity there is a more speculative in nature, and I don't want to lead anyone into speculative stocks. So what I cover on here is my dividend growth investing, a lot of blue chip companies, but there are some that have only been paying, most of them, maybe dividend aristocrats, dividend kings, but there are some that have only been paying dividends for a couple years or 5 years or 7 years. But so long as the dividends continue to grow over time and the company continues to be profitable and growing its free cash flow, that's what we're really interested in. That's what we're looking for. So with that said, we are going to do this week's portfolio update. As you can see on the screen, I've added $1,019 and some change, that looks like 56 cents or something like that, to the portfolio. That does not include actually the reinvested dividends. You will see here in the video that a significant amount is being reinvested by the portfolio itself, by the dividends that are spitting out, the companies within the portfolio that are spitting out dividends. So we will see that as well. Let's jump right into the video. So here, the first page, as you can see, we had dividends reinvested on August 1st and August 5th. And this is the snowball effect. This is the dividends, the companies within the portfolio, the dividends they are paying out, those dividends buying more shares and fractional shares, some cases, of the companies that pay the dividends. So as soon as they pay the dividend, turns right back around and reinvests into that company. That's what the drip is. If you have drip set on, dividend reinvestment plan, it'll automatically reinvest that. Now, I am thinking of turning the drip off and not having this automatically reinvested, because as you can see, it's starting to get a significant portion every week. $175.46 this week was reinvested total between the 1, 2, 3, 4, 5, 6 companies on August 1st, mostly August 1st, but also August 5th. We had General Dynamics. So 175.46, and some of these are reinvesting at prices that I don't really want to reinvest at. I mean, General Mills is up over 20%. CVS this week is back up over $100. I wouldn't really add to either one of these positions. AT&T and Verizon, they're down. I'd like to continue to add to those. General Dynamics, another one that's up almost 10% or 12%. I wouldn't really add to this position either. But the dividends automatically buy shares of these because the drip is set. So I'm thinking of taking that off, because I could have put this 639, this 1233, this 1680, and this 1215. I could have bought, more shares of AT&T or more shares of Verizon if I wanted, instead of reinvesting it back into these companies whenever they're higher. So I'm really considering turning the drip off. But with that said, let's look at what the drip is currently doing. So $175.46 was invested between these positions. Bristol Myers Squibb, ticker BMY, paid out $12.15 in dividends. Those went back and bought 0.16526 shares of Bristol Myers. So that increases my holding of Bristol Myers, and it didn't cost me a dime. It's based on the shares that I've already bought. So they purchased them at $73.51. Then CVS paid out $16.80, and they picked up more shares of CVS and 0.17517 shares, and they paid out that $16.80. It bought that fractional share there at $95.90. General Mills paid out $12.33. And if I didn't mention it, BMY is in the healthcare sector. It's a healthcare stock. It's in the healthcare sector. CVS is also in the healthcare sector, and General Mills, ticker GIS, is in the consumer staple sector. So General Mills paid out $12.33. They paid out at $75.62, picking up 0.1630 shares there. Verizon Communications in the communications sector, ticker VZ, paid out $85.53. That picked up 1.81509 shares, and those shares were picked up at $46.01. AT&T, ticker T, also out of the communications sector, paid out $42.26 in dividends, and the payout picked up 2.25154 shares. So over 2 shares there, over a share here. So you're getting a pretty nice snowball here where these are building on top of themselves by the dividends paid out, adding to the positions, making them bigger. So we'll get more dividends the next time they're paid out, even though I have not added to these positions, just the dividends adding. And they picked up those 2.25 shares at $18.76. And then the last one those were all purchases on August 1st, or dividends paid on August 1st, I mean. And then the last dividend paid this week on August 5th, so on Friday, was from General Dynamics, paid out $6.39, which picked up 0.02816 shares, and that was picked up at $226.93. So as you can see, the snowball gets bigger with not only the amount we're going to cover that I added, but also with the dividends reinvested. Next up, we're actually to the new income in the portfolio. These are funds that I added to the portfolio this week. $471.60 was added on August 1st, and with those funds, I picked up 10 shares of US Bancorp, ticker USB, in the financial sector, and we paid $471.60, picked up 10 shares at $47.16. That was on August 1st. Then August 5th, where the majority of the activity was, we put $547.99 to work. We picked up 2 shares of Siboney-Stillwater, ticker SBSW, out of the material sector. We picked up those shares for $10.07. We picked up 5 more shares of Bank of America, ticker BAC, out of the financial sector. We picked up those shares at $33.88 per share. We picked up 5 more shares of Intel. Intel has dropped off significantly, so we're going to take this opportunity to increase our position, increase our yield, and increase our potential future returns by picking up these shares pretty cheap and decreasing our cost basis. We picked up Intel Corporation, ticker INTC, out of the information technology sector for $35.31. And then last for the week's purchases in new income added, we picked up 10 shares of AT&T, ticker T, out of the communication sector at $18.19. That was $547.99 of the $1,019 that we put into the portfolio. And now for a quick look at the total portfolio update and the sector allocations. The current value of the portfolio is sitting at $123,995.56. The dividend yield is a healthy 4.755%, and the annual dividend income has grown again this week, continues to grow with the funds that we add to the portfolio, as well as the dividends produced by the portfolio being reinvested and picking up more shares. Snowball continues to grow, and the snowball currently sits at $5,895.45 paid out annually in passive income. This is just produced by the portfolio and continues to grow over time. This is what we're looking for. This is what it's about, guys. Whether the market's up, down, or sideways, this annual dividend income continues to grow. And as far as the asset allocation, the sectors, communication sector is sitting at 8.60, consumer discretionary is sitting at 3.93, consumer staples is sitting at 7.85%, Energy is sitting at 9.19%. Financials is sitting at 12.82%. Healthcare is sitting at 9.59%. Industrials has crept up to 14.10%. A lot of that is because we were adding significantly to 3M, and we were adding down in the 120s, 130s, but 3M has jumped back up to around 147 a share, so it has increased this position just by that price increase in those stocks. We're well over 60 shares in 3M, and that has a lot to do with why this has crept up here. Energy, we're sitting at 11.78. Or I'm sorry, technology, we're sitting at 11.78. Energy was at 9.19. Technology at 11.78. Materials is sitting at 6.50. Utilities is sitting at 1.74. We'd really love utilities to drop down so we can pick up some more. We sold out DTE, and really NextEra Energy is the only utility we have left, but it's been kind of out of my price range recently, so love for it to drop so we can add some more there, or some other utilities we need to start looking at. I need to do a quick review of some utilities. I haven't really looked at that sector in a while. And Reits and real estate is sitting at 13.90. Again, another one we haven't really been adding to, but it's been creeping up there, and part of that is because Reits have really bounced back. Stag, Realty, Omega Healthcare Investors is another one in our portfolio. Store Capital is in our portfolio. So all those have kind of rebounded. So you're seeing that sector of the pie increase a little bit, even though we haven't been buying a lot of REITs. And really, that's the update for the week. Drop a comment down below. Let me know what you guys did with your portfolio this week. Been seeing a lot of green. Is that what you guys are seeing, or are you still having some red days? What are the sectors you're looking at? What are the sectors that you're seeing recovery in? Do you think we're still in a bear market? Is this just a bear market rally, or is this the start of another bull run? Let me know what you think down there, guys. Drop them all down in the comments. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions and or opinions. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you next time. This is actually, the picture in the background was actually from August 1st there. My oldest daughter's birthday. That was what the sunrise that morning looked like out back. Thought I'd throw a new picture in there. You'll see this sun kind of creep across the to the right from there on the left-hand side of the photo. Creeps across to the right as the summer starts to end. We head into fall and we head into the winter. It's pretty cool to see it kind of move across there. You can tell when the Earth tilts by watching that movement. All right, guys. I think that's it. I'm gonna drop out. Hope you're having a great weekend. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. Can lose money and should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.